Hi everyone, it's Gail with Traders Help Desk, and I've had a lot of questions about trading multiple time frames, and I just wanted to go over using two time frames, how to go into a higher time frame. And the trend ATR really helps you because it has these little congestion dots here. And these congestion dots actually identify more than likely when it's pulling back on a higher time frame. You can see that the ATR was blue, then it flipped to red, but it formed this line of congestion dots. So this line of congestion dots, if I were trading just the 720-minute chart, that would have said, hey, I probably need to go and check my daily because this is a stronger pullback, but it's stronger because the daily is pulling back. So you can see that it stopped right at the ATR, which coincides with the congestion dots on the 720. So you could have taken this trade into the daily trend. The daily trend was up. It had been overextended on the stochastics. It needed a pullback or a retracement, and then it was going to continue up. And this is exactly what the 720 is showing you with this line of congestion dots. The fact that it could not break that line indicated, oh, you better look at your higher time frame. You see pretty much the same scenario over here where it pulled back and retraced to the congestion dot, then it went up, and that's when it started coming down. Of course, then it kind of flattens out and it goes up again. You see this line of congestion dots here on the daily. The reason you see that line of congestion dots on the daily is because it's pulling back over on the weekly chart. And this is the weekly chart. And you can see that it's pulling back and it forms this line of congestion dots that really kind of prevented price from going down. Then it goes up, then it pulls back again to the ATR, forms those congestion dots on the daily. So if you were trading this, you could actually take a trade at the congestion dot going into the weekly time frame. And that's really kind of what you want to be doing if you're trying to trade multiple time frames, is always going into the next time frame. What does that really mean? Well, for example, when you had this dot here on the ATR, you look up and you see that this ATR is blue. So you are going into this trend, okay? Over here where it forms the line of congestion dots, it forms a reversal bar. You're at the ATR over here, so you're going into this move on the daily. Over here, you see that you have a line of congestion dots. The actual reversal bar was right here. It is going into this move, and that's exactly what you want to be doing. Of course, anytime you get overextended on the stochastics, you can expect your higher time frame to retrace, and that's exactly what it did. Now, in this case, I'm only using the THD stochastics, the THD trend ATR, just to simplify this whole process for you. And again, you're just wanting to go into this higher time frame. For example, when you get this line of red dots here, are you going into red on your higher time frame? Yes, well then you could take that trade. Again, you're just going into the next time frame. So it's just a simpler way to trade, and it increases your probabilities when you're going into these higher time frames instead of trying to trade just a standalone time frame like a 15-minute chart.